From the Lineweaver Wealth Watch Center, this is the Financial Quarterback.
I'm Jim Lineweaver, your financial quarterback since 1993. Today we have Mark Sipos with us, the Director of LFG Tax Services, and he wants to help us share some strategies that can help both your favorite charity and your bottom line.
And the first strategy I want to talk about is a donor-advised fund, and these can be beneficial in two ways. You can contribute appreciated securities and get a fair market value write-off in the initial year that you make that contribution. That can be as high as 30% of your adjusted gross income. If you want to contribute cash, it can be as high as 60% of your adjusted gross income. So not only do you get a fair market value, but the second benefit is you'll never pay capital gains on those appreciated securities that you donate.
And the second strategy that can help benefit a charity and your own finances is a qualified charitable distribution, or what's commonly known as a QCD.
And if you're 70 and a half or older and you want to make a QCD, you can do up to $100,000 per year. It comes directly out of your IRA and goes to your favorite charity. You don't pay federal or state income tax on that distribution.
And the really nice thing is that this reduces your adjusted gross income, which affects things like Medicare, Social Security, and other tax credits and deductions. It may even help you reduce your income taxes. It can also help you offset any additional income you have if you're over the age of 72.
And that opens the door to a lot of other nice tax planning strategies. For example, you could take your IRA, convert it to a Roth, and offset some of that income with a charitable deduction. You can pull money straight from your IRA, give it to the charity, and again, take a nice charitable deduction to offset some of that income. And don't forget, like we mentioned before, gifting appreciated securities is a great tool as well.
Yeah, that always helps. And the fact you get to deduct the fair market value of your appreciated security as a donation up to 30% of your adjusted gross income. So you pay no capital gains taxes, and you can potentially save on net investment taxes as well.
Another great strategy is a charitable remainder trust. Now what you do here is you gift appreciated securities into the trust, and you get a fair market value write-off immediately in that first year. In addition to that, you get an income stream for yourself and your heirs, and at the end, you leave a nice legacy for your favorite charitable organizations.
Yeah, in fact, we had a client who had a highly appreciated tech stock, and we did just that. They were able to create an income stream for themselves, help minimize capital gains, increase their cash flow, and even help out their favorite charity.
But keep in mind that these trusts are irrevocable trusts, and that means that throughout your lifetime, if something changes, you may not be able to alter or change that trust.
Yes, so these are all great strategies that can be beneficial to you, your family, and your favorite charity. But many of these require planning before the end of the year. So the time to start is now. If you need help with wealth and tax planning, give us a call today. We're always here to help. Here's Fox News Sunday.